Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped below the 98.3 level on Monday, hovering near its October lows. Markets are now pricing in 2 rate cuts in 2026, a view reinforced by President Trump's renewed calls to lower borrowing costs. However, Fed officials remain divided. Cleveland Fed President Hammack noted that policy is appropriately positioned, allowing room to pause and assess the cumulative impact of 75 basis points of easing already delivered. WTI crude is trading near $57 as markets remain cautious amid escalating geopolitical risks tied to Venezuela. The immediate catalyst for the latest price rise was the US interception of a Venezuelan oil tanker at sea, alongside new sanctions targeting family members of President Maduro. These developments have intensified concerns over potential disruptions to Venezuelan oil exports, providing near-term support for prices. Spot gold traded near $4,435 during early European hours on Monday, briefly touching a fresh all-time high of $4,442. Growing expectations of Fed rate cuts in 2026, combined with rising geopolitical uncertainty ahead of the Christmas and New Year holidays, continue to underpin gold prices. In a low-rate environment with persistent currency debasement concerns, gold is expected to remain well supported. Yen eased back toward the 157.2 level, with investors positioning ahead of the long holiday period. Overall market activity may remain subdued. Softer US inflation and cooling labour market data have reinforced expectations for at least 2 Fed rate cuts next year, each by 25 basis points. This contrasts with the Bank of Japan's increasingly hawkish stance. However, the central bank stopped short of offering clear forward guidance, and uncertainty around Japan's future rate path could ultimately cap yen strength and provide support for the pair. Euro edged slightly higher toward 1.175. The euro found support after the European Central Bank left interest rates unchanged and expressed greater optimism about the Eurozone economy, highlighting its resilience to global trade shocks. The ECB has kept its key policy rate at 2% since June, and last week's pause was accompanied by upward revisions to both growth and inflation forecasts. Signals that the easing cycle may be nearing its end could offer short-term support for the euro.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.